Welcome to S&C Critical Insights. This is Sarah Payne. I'm a partner and the co-head of S&C's Capital Markets Group based in the Palo Alto office. I'm here today with Kathy Clarkin and Bob Downs, also co-heads of S&C's Capital Markets Group based in New York. We are going to discuss the recent surge in PIPE activities in the market and select issues to consider. In prior market downturns, including, for example, the financial crisis, we saw an increase in private investments in public equity, also called PIPE transactions. Based on activity that we've been seeing recently, there is indication that the PIPE market will continue heating up. Bob, what has the PIPE market been seeing recently?
You're definitely right. The playbook from prior market downturns has been definitely dusted off. We've already seen a few very substantial PIPE transactions occur over the past couple of weeks. Not as many as you might have thought. And I think the downturn was so fast that issuers still really need to get their arms around raising equity capital at the kind of prices that we saw over the past couple of weeks, even the ones that we're seeing now. But I think over the next few months, you'll see a very active PIPE market. You'll see a combination, I think, of issuers who think their valuations have recovered sufficiently from the lows that issuing equity again becomes attractive. And you'll just see others who really have no alternative. But in either case, given all the volatility that we're seeing in the equity markets right now, a private process like the PIPE is very attractive.
Kathy, what types of terms do you expect to be the focus of significant PIPE transactions?
Beyond pricing, the key terms will focus on governance rights and protective security features. So governance rights, typically depend upon the expected depth and duration of the relationship between the issuer and the PIPE investors. And obviously, the larger the equity stake, the more robust the governance rights will be. And these tend to include things like board rights, the right to appoint a specified number of directors to the board or committees, which is often proportional to the investors as converted equity interest. Voting consent rights, which may include veto rights over key corporate actions taken by the issuer, and of course, registration rights to enable the PIPE investor to have future liquidity of the common stock in the public markets. And notably, issuers may seek to negotiate standstill provisions or lockup agreements. And finally, the protective features, are inherent in the instrument itself and include things like dilution protection, conversion features, and optional or mandatory redemption.
And Kathy, one issue that comes up in PIPE transactions is the question of whether shareholder approval is required for the transaction under stock exchange rules. New York Stock Exchange and NASDAQ rules are notoriously difficult to navigate and are key to focus on early in any transaction planning. There has been some recent relaxation of the rules, particularly with the New York Stock Exchange.
Yeah, that's right, Sarah. One key development was with the New York Stock Exchange. On April 6th, they filed an immediately effective rule change with the SEC that waives the application of certain stockholder approval requirements for new equity issuances through June 30th, 2020. And the relief is intended to provide NYSE-listed companies with flexibility to raise capital during the COVID crisis. And in particular, the relief expands two of the current exceptions to the stockholder approval requirements. First, under what's referred to as the related party transaction rule, the temporary waiver significantly broadens the current exceptions to the rule and permits sales of securities to related parties, the key thing being here, regardless of the percentages issued, which under current rules is either 1 or 5%, depending upon the nature of the insider. And the requirements there are that the sale be for cash, meet the minimum price requirements, and is approved by the company's audit committee or a comparable committee of independent directors. And the second waiver relates to the 20% rule, and the temporary relief here significantly extends the bona fide private financing exception, which generally permits issuances of securities in excess of the 20% restriction in private transactions for cash where the minimum price requirements are met, so long as no one purchaser or group of related purchasers acquires more than 5% of the shares. So recognizing that COVID-19 has created liquidity issues for many companies, NYSE noted that companies often in distress may obtain financing more easily in private transactions with few key investors. So the temporary relief waives the 5% ownership voting threshold, permitting private placement of securities regardless of their size, the number of participating investors, or the amount of securities purchased by any single investor, provided the minimum price requirement is met. So these are very welcome changes, albeit temporary, and puts nicely listed companies on equal footing with companies listed on NASDAQ, which don't have those two specific requirements I referred to.
Thank you, Kathy. As we look through the checklist of other items to cover, issuers should review their organizational documents to ensure that they have sufficient authorized shares to complete the transaction, as well as look at any credit agreement or indenture covenants that may be implicated. Depending on the size of the transaction and the nature of the investors, antitrust approval is also an item to keep on the list. Council should also be prepared to discuss the director's fiduciary duties in connection with approving a significantly dilutive transaction, particularly if insiders are involved. Lastly, Council will need to work through confidentiality agreements with potential investors and should anticipate the need to address requests to, quote, cleanse the investors of any material non-public information, or MNPI, promptly following completion or abandonment of a transaction. These are just a few of the many areas to keep in mind as companies consider a PIPE transaction. Thank you for joining us today. For more information on our podcasts and COVID-19 resources, please visit www.sulcrom.com.